And I have a saying is that, bears sound smart, but bulls make money. And I'm a firm believer in that. But I think one of the best, like, overarching investment mentality philosophies that a client can have is to be a rational optimist. Because I think that pessimism about the long term, it just does not align in any way with a historic worldview. Investors can choose to believe that, right now is the beginning of the end. But that's honestly, Matt and Josh, a bet against all of humanity and against human nature itself. It's always been the case that progress occurs against, an inevitable backdrop of catastrophe. It always has and always will. But invariably, and this is probably the important part of being a rational optimist, is like, you can always go find what you're looking for. So while we've had some very great periods, of market returns as of late, I think we need to be cognizant and keep our head on a swivel, but still remain that rational optimist. Because what this chart I have showing here right now is like, hey, you know what? Let's look at the past. Let's look at history and look at, the ramifications of the dot-com bubble in 2000s. Think of the ramifications of the financial crisis in 2007 and 2008, and try to see if there's any similarities that, signs that we could look for right now that could help, predicate or try to figure out if there's going to be a recession, whether it's large or small or short in the future. And what we're seeing right now is that a lot of the precursors of the 2000 and the 2007 recession, the flashing red signals or the red flags, there's not a whole lot out there right now. But again, to Matt's point, that doesn't mean that we should be super bulls right now. I think we need to be that rational optimist by still remaining bullish on the market, but be very cognizant of some of the potential problems out there. So for you guys, what